Describe to me what a $60 to $80 oil price means for you.
Well, it's good. I mean, if you look at what we've been through for the last 3 years in the reset, we went from 100 down to 30. So, and really coming into this year, we were planning on a $58 to $60 world. So, seeing things go above that, for us, for Apache Corporation, a $5 movement in oil price means about a $300 to $350 million increase in cash flow. So it's helpful to our budgets. It helps us, open up some things. But really, from a planning perspective, today it doesn't do a lot. I mean, it's just more incremental dollars that we can invest or potentially return to shareholders.
What's your priority for that? CapEx, dividends, buybacks?
Well, if you look back over the downturn, we preserved our dividend, we preserved our credit rating. It was important to us, so preserving that has been key. Today we budgeted it to, like I said, 58 to 60, so there would be the ability to potentially increase into some things we want to do, as well as potentially consider, returning to shareholders either through an increase in the dividend or potentially, some buybacks of our existing common.
With the advent of sort of Venezuela and then the Iran sanctions, as well as Saudi and Russia sort of talking about ramping up production again, we've seen a lot of movement and volatility picking up in the oil price. To make a decision as a CEO, your decisions can't be volatile. So what do you need to see? Is it a sustained level above 70 for how long that would then enable you to make different decisions?
Well, I mean, we plan conservatively. So today, we're in a level where that's above where we planned, and so we're in a comfort zone. So it means incrementally is more cash flow. We generate more cash flow, then we have the ability to either invest in activity or return to shareholders. So I think the key is planning a little bit conservatively, and that way you've got the luxury. I mean, if things took a step function one way or another, then you adjust. I mean, one of the biggest things we can do is increase or decrease our activity set. If you go back to 2014, when prices fell, we went from a period, we were running 94 rigs in the U.S. when I stepped in this chair. And by the end of the first quarter, we got down to 16 rigs. So the ability to be able to scale back quickly. And then a year later, by the second quarter, we were at 4 rigs in North America.
Wow.
We ramped back up. We've been running about 16 rigs now. So it's been we're in a good spot today. We've been running the crews. We've got a lot of synergies, a lot of efficiencies. We're in a really good spot operationally.
What do you think the Saudis and the Russians are going to do?
Well, it's going to be an interesting meeting next month. I mean, you see the dialogue, both sides. I think the market has clearly tightened. You can see that with the curve being backwardated. And then when you look at, tier 2 OPEC has some structural decline. So clearly they want to keep things in check. You've got some potential, I'll call them congestion points coming out of Permian. And so there's a fine line to walk, and we've seen that over the last 24 hours. I mean, it will be a very interesting meeting, here in June.
Energy equities have underperformed, though, despite the rise in the oil price. Why do you think that is? Why are investors hesitant?
I think if you look back over the last 6 or 7 years, the corporate level, returns have not been there. And so while price has risen and cash flow is increasing, I think investors want to see, can we deliver the corporate level returns? And so they want to see that, and you don't measure that over short time periods. And we've put in new plans over the last 3 years. We've reset our cost structure. We've been really focused on delivering. How do we deliver, returns at the corporate level that are going to be, attractive and that would compete with other industries? And so, you look at the energy today. It's at the lowest weighting it's been relative to the S&P. So, every percentage basis point move up is significant. It's billions of dollars of market cap potential to flow back in. And I think we as an industry have to prove that we can deliver those returns to attract those, funds back into our industry.